Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. On Monday, personal income for September rose 0.2% on top of the prior month's 0.4% gain, and spending rose 0.4% on top of the prior month's 0.5% gain. The PCE price index rose 0.1%. Markets went on wild swings on reports that the U.S. is planning on adding additional tariffs on Chinese goods if upcoming trade talks with China falter. The Dow Industrials were down as much as 566 points before ending 245 points lower. The S&P 500 closed 0.7% lower, officially in correction territory. On Tuesday, the Case-Shiller home price index increased 0.1%, and consumer confidence rose 2.6 points to 137.9. Markets surged with the Dow Industrials closing up 431 points. On Wednesday, the ADP employment report for October came in at 227,000, and the employment cost index for the third quarter rose 0.8%. The EIA petroleum status report for the week ending October 26 saw crude oil inventory increase 3.2 million barrels. Markets continued rallying with the Dow Industrials closing up 241 points. On Thursday, jobless claims for the week ending October 27th declined 2,000 to 214,000. Non-farm productivity for the third quarter rose 2.2%, and unit labor costs rose 1.2%. The ISM manufacturing index for October declined 2.1 points to 57.7, and construction spending for September remained unchanged. Markets got a boost from a positive tweet from President Trump saying he had a good conversation with China's president, and the lower than expected manufacturing report decreased 10-year Treasury yields to 3.14%. Markets rallied with the Dow Industrials gaining 264 points. On Friday, non-farm payrolls for October were up 250,000, much stronger than expectations, and the unemployment rate remained steady at 3.7%. Average hourly earnings rose 0.2%. Markets opened strongly higher on the news, but then lost the gains on weakness in Apple's quarterly report. Now let's take a look at some stocks. Facebook Inc. on Tuesday announced its third quarter results. The social media company beat earnings estimates, but its revenue missed expectations. Revenue jumped 33% to $13.7 billion, while earnings per share was $1.76, up from $1.59 a year ago. Daily active users increased 9% year over year to 1.49 billion for September of 2018, and monthly active users were 2.27 billion. Facebook shares rose 2.9% on Wednesday. Fitbit reported better than expected quarterly revenue and earnings, sending its shares up over 25% on Thursday. The company said revenue came in at $394 million, and they sold 3.5 million wearable devices in the third quarter. Smartwatch revenue grew to 49% of total revenue from less than 10% a year ago. Apple on Thursday announced earnings that beat street estimates, but its shares fell in after-hours trading as iPhone sales missed estimates. The company said quarterly revenue increased 20% to $62.9 billion, while services revenue hit an all-time high of $10 billion. Quarterly earnings per diluted share jumped 41% to $2.91. Apple shares fell 4.3% to $212 per share in after-hours trading. Under Armour on Tuesday announced third quarter revenue and earnings that beat analyst estimates, sending its shares up 24%. The retailer said third quarter revenue increased 2% to $1.4 billion, while wholesale revenue rose 4% to $914 million. The company also raised its earnings outlook for the full year, expecting revenue to increase 3 to 4% in North America and international sales to jump 25%. Red Hat agreed to be acquired by IBM for $34 billion, sending Red Hat shares up by 45% on Monday. IBM will acquire all of the cloud software company's shares for $190 per share in cash. The deal is expected to help IBM boost its cloud computing business. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.